Nathan Jennings as well from BlackBerry, cybersecurity. As a security analyst, kind of spent some time talking about security, but we do have the broader BlackBerry company we talk about, so I'll let you talk about that as well. But we'll spend some time talking about security and cool things that are interesting in that sense. So without any more blabbing from me, I'll let you guys introduce yourselves and tell me a little bit of background on Nathan.
Yeah, sure. Well, firstly, thank you, Eric, and all the team for having us here. It's great to be here in beautiful Colorado. So my name's Tim Foote, for those of you who don't know me. Up until fairly recently, I was the head of investor relations, then moved into the CFO of the cybersecurity division, and then last week became the CFO of the company. So very proud to be in this role. Looking forward to getting stuck in and moving the ball down the field somewhat, and we'll get into that in more detail.
Nathan Jennings, I'm the Senior VP and General Manager of our cybersecurity products. I joined BlackBerry 2.5 years ago in a strategy product management role, and then last September was asked to take over all of the product engineering organization. And before this, I worked at McAfee, and I also worked at Motorola, so I know the history of RIM and BlackBerry as well.
Yeah.
All right, so just a level set for everyone. Again, BlackBerry is a big company, at least two big silos or two divisions. So talk about the division of BlackBerry, what each side has.
Yeah, okay, so we like to say two divisions. So the first one's called IoT, Internet of Things, and the largest component by far in there is our QNX business. And QNX is the leader in foundational software, particularly on the safety certified side in automotive, but not just automotive. It's in some adjacent industries as well, like rail, medical, industrial. Effectively, the key differentiator, and gives it quite a defensive moat in its competitive space, is the fact that it's at the intersection of safety certification, which is actually a really hard thing to do, and also high performance. So there's really very few people who can do both, and we're leading it on that side of things. So there's a fair chance that everyone in this room has BlackBerry software in their car, believe it or not, powering things like ADAS functionality, digital cockpit. So we're very excited about that side of the business. It's in a really good spot. It's got a lot of secular tailwinds that are propelling that business forward over the next few years. So that's in a really healthy state. On the other side, we got a cybersecurity business, which is really under the hood, and Nate can speak to this much better than I can, but under the hood, we got 4 key products in there. So the one that you're more familiar with, Eric, is Cylance on the endpoint security side, but we also have a large endpoint management product as well, a UEM, and then we also have a product in the critical events management space called AtHoc, and then some NSA level cryptographic voice product called SecuSmart. So there's a lot going on. We'll get more into some of the financials, but effectively the company in the last 6 months has come a long way. We're going down the path of separating those two divisions. So as you can imagine, different customer base, different sales cycle. It's just fundamentally quite different businesses. So we're far down the path of that, and whilst we're doing it, we're getting our cost structure right. So got to see that show up, that progress show up in the stock price, which is one of my key objectives. But right now, that's where we're at.
So 1 week into the season, what are the I don't know, what's the 7-day look back, or what happened? What's the marching plan going forward?
So the good news is I've been with the business for quite some time. Yeah. So none of this is net new to me. But shareholder value is something that people throw around quite a lot, but this is my priority number one. So as I mentioned, since we've had the new CEO 6 months ago, we've taken a lot of costs out of this business. So it's a top line around about $600 million business. We've taken out around about $125 million in the space of 6 months. So significant achievement to do that. And at the same time, paradoxically, some of the fundamentals of the business are actually improving. And that's really a function of the fact that we've been forced to focus in on areas where we particularly win. And it's showing up in things like ARR, which has been churning for some time. Last 2 quarters sequentially increasing. Dollar-based net retention is similar trend.
Yeah.
So I want to get the business to cash flow positive, as does the CEO, John Giamatteo, as quickly as we possibly can. So that means there's more focus has to come on getting the cost structure right, but we're going to be very kind of forensic and make sure it doesn't damage the fundamentals of the business.
So one narrow on the security side, that's what I made you're involved too. But so talk about that evolution of BlackBerry and their involvement in security. I mean, I think a lot of security investors know back when the 3 Cs were names and endpoint and silence, Carbon Black and CrowdStrike. So each 3 took different paths. But so talk about the history of BlackBerry, how things have changed since you guys brought silence on, etc. We'll start around the history.
Yeah, I think from a history perspective, I was actually at a competitor to the 3 Cs at the time, so I was quite pleased when I saw them get acquired at that time. I think at the time in the market, Cylance had the best AI and ML. We still do. We feel we've put a lot more investment into that, especially in the last 6 to 12 months, and evolving some of what we do with AI. But we were behind on EDR, right? And we're constantly trying to catch up on that. And while we were doing that, other things started evolving around the endpoint that we weren't playing in. But what we've seen within our customer base and what we've pivoted to this year strategically is, what were we being asked for the most? What were we seeing customers doing the most? It was adding on MDR.
Yeah.
And MDR services. So we've pivoted heavily on the Cylance side of the portfolio to focus on MDR. We've launched a lot of new products this year. We launched an MDR on demand service for all of our existing Cylance customers to quickly add on an assisted support capability. And we've just launched an MDR Pro that does the full XDR capabilities as well.
Yeah. And then just maybe help roughly scale the different businesses in security, the MDM part, the Cylance part, the critical event management, just rough.
You're looking at me. Yeah, so we haven't given that.
Degrees, which one's bigger?
Yeah, okay. So the 2 largest are the UEM and Cylance.
Yeah.
And then the other 2 kind of make up the balance. But we're very excited about the SecuSuite because it has the potential to grow quite strong.
Yeah. And Nathan, I think since you're joining, you helped narrow the focus on the security side of things. So maybe talk about some of the efforts you've done to narrow the focus. And cost takeout seemed like a big thing that was an initiative for the company in general. So as you narrow the focus, what were some of the things that you were able to save cost on essentially?
A lot of
be more pointed in like the products you're delivering to focus on that side.
Yeah, a big part of the cost shift for us was a startup doesn't necessarily build things efficiently in the cloud. So a lot of things were sort of half built and cobbled together. When I joined, we were trying to build our own data platform and our own XDR platform. And that's one of the ones where we scaled it back and we partnered with Databricks as a leading data platform. We rebuilt the entire Cylance backend data ecosystem and AI around a Databricks model. That offloaded a lot of cost of complexity on AWS that we were building. And a lot of engineers that had to go build stuff that we weren't experts in. And I wanted to focus our R&D resources on what we're really good at, which is the data science and the AI.
Yeah.
So a lot went in there. Plus we were working on trying to branch into other areas. We were working on, at one point we were working on a DLP product. So we shut down a lot of the things that worked where we weren't at a place to get to the scale we needed.
Yeah. And then on the MDR side, I mean, it seems it's incredibly complementary, and it just seems that's where the world is going. Just the ability of customers can't handle endpoint themselves, can't handle security in general themselves, and are looking for third-party help. So talk to me about kind of maybe when you added MDR, what you're seeing from customers looking to adopt that product, and maybe what just gets you excited? And we can kind of, my follow-up will be about the XDR side of things.
I really enjoy the MDR space. That's another one that we transformed. When I joined, it was completely outsourced to a third party. We brought that whole business in. We've scaled our own analysts, right? It's something that takes a bit to get scale in a business like that. And it's still small, but it's the place that's growing in the portfolio. And I like it the most because we're really engaged with those customers, right? We're involved with them every single day, unlike some of the endpoint transactions where it's like they buy it, you walk away for a year, and you come back. And so we see a lot higher retention rate on a per customer basis as well.
Yeah. And then is your view that first party kind of MDR is the way that people want to adopt MDR services? I mean, because there's a lot of third party MDR providers out there.
Yeah, we're seeing increasing desire for that just because if you are the first party, you actually understand the technology that's deployed way in more depth. One of the things that we pride ourselves on with each of our MDR customers is when we onboard them, we put a lot of time and diligence into understanding their business and getting the configuration set up in a way that we know is going to be effective for them.
Yeah. And Tim, financially, what does this mean for you? Is it a significant uplift for customers to add that value-added managed service on top of this?
Oh, absolutely. And I mean, if we're looking at dollar-based net retention, and fundamentally this is a ratable business, so we need to build the steady base of ARR. The uplift from just pure endpoint software to managed service, full 24/7 managed service, that's a significant uplift, and even bigger if you look at XDR. But we do actually have a really innovative product which kind of bridges the gap. It's our on-demand product, Eric, which if you can't afford to make that big step to full 24/7, you can actually just press a button and get access to our team to support you with an issue as and when it comes up. So that is a small uplift, and we're hoping that encourages some of these customers to actually realize just how valuable that is and then take the full step. So in terms of upsell, that's probably our key push, certainly on the silence.
We launched that at the end of May. It's like 15% uplift on their endpoint license. So it's a really easy step up, and we've seen a really good pipeline over the last couple of months. We've already converted several dozen customers and had people already clicking the button, and we helped them, right?
Yeah. And then XDR takes it a step further, right? MDR is endpoint, XDR is more comprehensive than that. So talk about like what the value is you're delivering on the managed XDR, and I think you're calling it Pro with Pro SKU.
Yeah, on MDR Pro, which we just launched last month, that expands our stuff. Our current MDR offerings required Cylance technology to be on the endpoints. MDR Pro actually opens us up. We've got connectors for all of the major endpoint players, plus all of your network and identity. It's 300 plus things that we can then bring in. It's going to unlock a different set of opportunities for us because now we don't have to just go to the current customer base, right? Or we don't have to go to a customer and say, hey, before you can get our MDR service, you got to rip and replace your entire endpoint. And so like hopefully that'll give us an entry point into a lot of customer accounts.
And this is like we saw other endpoint vendors buy log management companies. So this is the idea: you're ingesting logs from all the other sources of telemetry, dumping into like a data lake or lake house.
The Databricks' data lake house. Yes.
And then does this allow you? So I think you kind of alluded to it, but it allows you to manage endpoints that aren't Cylance endpoints. Correct. Is that right?
Correct.
Yeah. So do you have partnerships at this point, or like strategic vendors you're aligning to, whether it's Microsoft or CrowdStrike?
No, I think just looking out at the market, there's a lot of Microsoft and CrowdStrike endpoints that is a big opportunity out there for us.
Yeah. And anything you'd like to highlight on the other side of the security portfolio in terms of where you're focused, unified endpoint management, critical?
Yeah, I'm really excited about a lot of the opportunities across the portfolio as well. And the unified endpoint management, it's been a long time product for us. There is still a sizable customer base. It's a profitable business for us. And we're still seeing a lot of opportunity around the world, especially in Eastern Europe, Middle East, Southeast Asia, where countries never really deployed these types of mobile security solutions, had nothing. You'll be surprised how many governments, the top officials use WhatsApp. And our ability to bring in both our unified endpoint management to lock down the devices, to make sure that our apps and data stay secure, but then we can bring in our SecuSuite, right? NSA level encryption that's used by some of the top governments and militaries around the world, and bring that into the suite. And then on our ad hoc product, we continue to find just tremendous opportunities. We've had a stronghold in the U.S. government. 90% of the U.S. government uses ad hoc. It was actually heavily used during the CrowdStrike incident by our customers, because a lot of the systems to communicate were down, right? And then whether it's an IT issue like that or a cyber attack, if you can't get to your Teams or your email and communicate, you need a quick and fast way to communicate. So heavily used in that, heavily used in other recent public events as well. And we're finding a lot of opportunities to bring that into police and ambulance and some other adjacent sectors from where our strong points are.
You mentioned CrowdStrike, not me. On the outage, do you have a technological opinion on this matter in terms of like what went wrong and maybe how you think about like the way they did deployments or the kernel access? Do you have a view? Do you do things differently, similarly? Do you think it was a wrong approach, the correct approach, just a mishap on a QA issue?
I having been in the industry for a while, I think a lot of products are, we're deep in the kernel, right? Of all types of software, we're all the deepest in this, the kernel space in the Windows ecosystem. And there's a lot of things that can go wrong. I don't know all the details of what exactly went wrong in their process. I can tell you in our products in Cylance, because of our machine learning first approach, right? As soon as our product kicks off, the first thing it's doing is just checking against machine learning models. So there is no deep underlying stuff that we got to keep updating, and we pride ourselves on those models don't have to be updated. Right? We still have models that are running on Windows XP machines from 6 years ago and blocking modern threats. So
interesting. Yeah. How have you like maintained pace on the AI ML side of things? Because I think I clearly remember back when Cylance was a standalone company, they were the leader in AI ML and the next gen antivirus side of things. So what have you been doing on the investment side to maintain that strength and leadership in the AI?
Yeah, I think for a few years post-acquisition, it got lost in the BlackBerry shuffle. I've refocused that team. We've added some additional talent that we had across the organization, and just focused ourselves on solving some of the problems. We hadn't actually done any model updates for a while, but we've already filed 4 more patents this year on ML topics. So really starting to roll and now applying that into broader spaces like the XDR space as well.
Competitive environment. It's a highly competitive environment. The market's consolidated. What do you see competitively? Where are you finding the opportunities to pick your spots, have a competitive edge? Whether it's verticals, geos, et cetera. Where do you find your advantage?
I think that's been part of our shift in how we got to some of the cost structure savings as well. Is really, I spent a lot of time just studying what segments of the market, what verticals, where did we see the most attraction to our product, understanding why. So we continue to see a lot of opportunities in places where I'd say they still have a lot of older legacy devices. Because of our ability to bring machine learning back to all the way to Windows XP and Linux variants from back then.
And do it on the endpoint as opposed to like doing it in the cloud, essentially?
On the endpoint and do it offline. Many of these devices aren't connected to the cloud. And we've done repeated tests showing that our efficacy like barely differs when you go online or offline. That's because the foundational piece of Cylance was that the ML model they built was for the endpoint first. So many other companies built it in the cloud first, and it was so big that they had to build smaller versions for the endpoint. We built one that worked on the endpoint, so it's the same one that runs in the cloud.
Any questions before I keep going? On the go-to-market side, maybe for both you and you both, what are you doing on the go-to-market side to drive more awareness of Cylance? To me, when I was walking the RSA floor, I saw that Silence brand pick back up. So, but big picture, what are you doing on the go-to-market side to drive that ARR growth that you're starting to see?
Yeah. So I'll start. So effectively, like I said, we've focused. So the number of sales plays, we've kind of slimmed that down quite significantly. So managed services, MDR, that is one of the key focus areas. It's somewhere small, but it's growing fast. So we're trying to get our direct sales force and also indirect to focus on that opportunity. Then at the other end of the scale, predominantly like the MDR is very much middle market, sort of SMB type thing. The other end of the scale, we had great success last year with large government deployments, including the government of Malaysia, who bought all 4 elements of our portfolio. So we're looking to replicate that with large governments as well. So that's a different type of sales motion. And we've got a team of people who are going around focusing on that type of thing as well. Yeah. So I'd say it's narrowed and it's a lot clearer. In the past, we try to do an awful lot of things, many more sales plays, and we've allowed our sales team to sell all 4 components of the cyber portfolio. So if you're in the customer, you're having a meaningful conversation, you can introduce all the other different angles. So that's the key focus. Anything to add, Nate?
No, I'd say just to clarify that prior to this year, we had like individual teams selling different parts of this in different segments, and we were trying to cover every segment of the market on all products. And we just whittled it down. Again, we looked at the data, saw where we were the strongest, and said, have we tapped out that market yet? No. Well, let's go focus our marketing, focus our salespeople.
And then the indirect side, I mean, channel's big in security. So what's your presence in the channel or investment on that side of things?
Yeah, I think channel is one where we brought in a new leader at the start of the year to run our channel. And he's been rebuilding a lot of the programs, again, in the same vein, though, of focus. Right? What are the partners we need for each of the different products in the different verticals and routes to market that we're going? And we've been building that momentum throughout the year so far.
Couple of minutes left. From a macro perspective, I mean, cyber is always the beneficiary of being resilient. We had some conversations at the conference this week, our IT leadership and some channel folks that like just the cyber budget is always resilient. What are you seeing from that perspective on cyber budgets and maybe a little bit more holistically on macro?
So it's one of the last things to be cut, which is a good place to be. No one wants to be the CEO who's having to report to their customer base that all their data has been exfiltrated and shared on the dark web. So it's robust, but I'd say the key dynamic for us, Eric, has been an elongation of the sales cycle, something that not only us, but pretty much all the peers have been saying for some time now. It just takes longer to get to a deal.
But stable, like in terms of where we've been?
I would say,
stable, but again,
still
I think the deals are taking longer. They're sometimes the customer wants an extra 90 days, right? Because they couldn't quite make the decision.
In the last in a minute here or so, anything else you guys like to share about the story that maybe investors aren't appreciating, or as you're trying to resurface maybe the security side of the house, and obviously you're segmented the business, and I don't know, you said a lot of shareholder value to be unlocked.
100%. I mean, if we look at the stock price right now, and everyone take their own view on it, but certainly when I look at it, I see there's an awful lot of value to be had. The company is very underappreciated right now. We've got a very strong business on the QNX side, and arguably that is the market cap in itself, if not more. And then the cyber business has been overlooked, and to an extent we can understand it. The metrics have not been performing as strongly, but we're seeing some progress there, and just directionally slash the cash burn year on year is significant difference. And I don't think the market has yet appreciated the change that we've gone through. So my job and the team's job is obviously to get that message out there and to continue to improve the underlying fundamentals of the business.
Yeah, so it's been strong progress, so looking forward to seeing it. All right, thanks Tim, thanks
Thank you.
Nathan.